What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I wanted to talk to you about calendar spreads as a follow-up to what I posted not too long ago. In the previous video, I showed you how you can make monthly income trading calendar spreads, but a lot of people had some questions about how to best trade them, when is a good time to actually place calendar spreads, and how you can actually optimize it in such a way that you're eliminating downside risk on your trades, okay? Now, before I get into that, I also want to wish everyone a Happy New Year. 2020 is finally past us. It's been a very difficult, crazy year for a lot of people. I have my prayers and condolences for those who lost loved ones or their friends, and other people who are hit in different ways, like losing their jobs and struggling financially. And the whole stimulus news was crazy, with the government deciding for months if we should get $600 or not. So it's been a really, really crazy year, guys, but I'm really hoping and praying for a solid 2021. And I want to thank all of you who are watching this video, who are subscribed, who are part of the Discord member, that we could all grow our portfolios and have a lot more prosperous 2021, okay? Now, having said that, let's get into it. So to give you a brief overview of what calendar spreads are, a calendar spread is when you're buying a call that is farther out in expiration and you're selling calls against it in the shorter term, okay? So to give you an example here, let me pick ticker symbol TAN, which is the solar ETF for all the solar stocks. It's one of my favorite stocks ETFs to be invested in right now. So the way you would place this would be, you would buy a long call that is, say, several months down the line. Let's choose either April or July. You can even do leap calls, say January of 2022. So just in this example, I'll take the April 16th expiration. You could buy a 110 call, and simultaneously in the short term, say January 15th, you could sell a 110 call against it if you're expecting TAN to stay below 110 by expiration, okay? Now, the goal with this is you're expecting TAN to go up a lot leading to this April 16th expiration, but you're selling short-term calls against it because you don't think it will reach 110 by January 15th yet, okay? And by doing that, you're collecting a credit of $260 while paying $895 for the long call. Now, the goal with this is you're collecting $260 for now, but every single month or every single week, potentially, you could sell these short-term calls against it and keep collecting credit so that eventually you make back your full investment of $635. And by April, TAN could potentially appreciate to 110, 120, or even 130, and then you can finally sell out of your April calls for a much larger profit, okay? So right now, if you trade a calendar spread like this, it would cost you $635, and you would want TAN to stay below 110. But the best way, in my opinion, to actually trade a calendar spread is to first buy the long call, the 110 call, for example, let the stock appreciate a good bit. Let's say over the next 2 to 3 weeks, TAN can actually go up to 110 or 115. Then you would actually want to go ahead and sell a 120 or a 125 call for, say, mid-February to get a lot more credit out of it, okay? So to show you as an example as to how this would work, I first got 10 of these 110 calls for TAN. My average cost was $245, so for 10 of them I paid $24.50, and I first started buying them way back in October, okay? And then as it started dropping, I started averaging down, so I got more contracts at 195, a couple more at 85. I had a few more in the history, if you'd see, in mid hundreds. So I kept averaging down as it was progressing, because I got this calls in October. I had 6 months until expiration. I knew they would recover at some point, so I kept averaging down without selling a short-term call, okay? Now, after the average shot up so much, I decided to sell the Feb 19th 125 calls against it, okay? So I sold 10 of the 125 calls expiring on Feb 19th, and my average credit was $405, or a total credit of $4,050, okay? So as you can see, I paid only $24.50 for the April 110 calls, and I got a credit of $405 for the Feb 19th 125 calls. So there's absolutely no downside risk anymore, because I've already locked in at least a $1,600 profit, okay? So to help you visualize that, I could actually edit the prices here. So I paid only $245 for 10 of these calls. And then for the Feb 19th, I'll choose expiration here. I sold the 125 call. I got a credit of $405. So you actually get a net credit of $1,600 for this, which is like locking in a profit of $1,600. But if I didn't choose, if I didn't wait for it to go up before selling it, the way this would have worked is, if I got it right now, let's say April 16th, 895 call, and I sold the 125 call as is right now, it would have cost me $6,420 to open this debit spread. But because I got this at 245 a long time ago, waited for it to appreciate, and then I sold this 125 call for 405, instead of paying $6,400, I'm actually getting a credit of $1,600. And if you hit calculate here, I'll turn this into a table, you'll see that there's absolutely no downside whatsoever. Okay, if it keeps going up, there's a lot more profit to get. But if you keep going down, it's completely limited, because even if TAN stays below 110 by Feb 19th, this will expire worthless. The 110 call will still have a decent bit of value, maybe not the current price of $8.95, which you can see here. It's $8.95 now. It may not be $8.95 if TAN actually starts falling from here, because you'll at least lock in a profit of $1,600, okay? And if it does go to 125, for example, by expiration, you'll see the math here. If it does go to 125, you'll see that your maximum profit is about $20,000, because you would be able to sell your April call for $18,760. Your 125 call would potentially expire worthless, and you could close your April call for $18,760, and you also got an additional credit of $1,600. So that's a net profit of $20,360. Okay. So that's exactly how I like to trade calendar spreads. I don't buy the long call and sell the short call right away. I actually wait for it to appreciate, and then I would sell calls against it, okay? To give you another example, just to solidify the concept here, we have Riot Blockchain with Bitcoin going crazy. Riot Blockchain has been going really well with it because it's a Bitcoin mining stock. So I got these leap calls a while back on December 10th. And I just got 2 of them at an average cost of $370, expiring on June 18th. And after Riot shot up a pretty decent bit, from December 10th, Riot was around $9 or $10, and now it's at $16.84. So after it appreciated so much, I decided to sell 2 of these 25 calls, expiring on January 8th. Okay, I collected a credit of $180 for it. I paid $740 for the other calls. I've already recovered some investment. And if Riot does shoot up to 25 by January 8th, I can close out of this, and I could buy this back and also sell out of my 15 call for a lot higher profit than I would if I bought the calendar spread at the same time. Okay. Now I did this even previous week when Riot was still around $11 or $12. I sold a December 31st $20 call to collect $200. And once Riot started coming down, I actually bought it back. And then now for January 8th, I sold another 25 call to collect $180. So as it is, my initial investment was $740, and I already collected $380. So I pretty much recovered half my investment already. Okay. Now if Riot keeps going up, considering Bitcoin is shooting up to $33,000 right now, I could. It may or may not reach 25, but if it doesn't, I'll just wait for it, let it expire worthless, and then I could sell another $25 or $30 call for, say, the end of January, and collect another $200 to $300, depending on depending on the value of the option at the time. Okay, so this is how you can trade calendar spreads month in and month out. Wait for the stock to appreciate and then sell a call. And on red days, that's the best time to buy the leap calls. Okay, so when Riot was still $7 or $8, that's when I got the $15 leap call for June. And once it started appreciating it to $11, $12, I sold a $20 call. And now after it shot up to $17, I sold a $25 call. And if Riot just keeps going up, that's what I'm going to do. And eventually I'll take my profits when I think Riot is way too overvalued, and there may not be a whole lot of upside left from that anymore. Okay, so that's what I wanted to share with you guys. I hope that you found that helpful. If you still find it confusing, feel free to leave a comment below. If you're on my Discord chat, chat with me there, DM me, post in the group chat, whichever works for you, and I'll try my best to clarify it even further. Okay, so other than calendar spreads, I also wanted to share some of the stocks that I'm watching. A lot of the high-flying tech stocks have dropped quite a bit which was actually very much needed, because they just kept going up in a straight line as if there's just no upper limit to it anymore. So I'm actually excited that they've dropped a decent bit. So I've been watching Open Door. Right after the merger, they've dropped quite a bit. They reached over $31 on December 21st, and they've just been dropping since. And considering this was IPOB, started at $10.75, they shot up 200%. So this correction was much needed, and I'm glad it finally did, because I'm now more confident to buy spreads and calls on it. I do have 100 shares and a couple of debit spreads that I posted in the Discord group, and I'm expecting them to start going back up. Another stock I like a lot is Luminar Technologies. This was another high-flying stock that corrected quite a bit. They've shot up as high as low 40s, around $41, $42, and they finally corrected a little bit, started going back up, and they're going down again. So it looks fairly attractive here, but if it drops under 30, that would be a great time to buy further calls. So I'm definitely watching Luminar Technologies. We also have Fubo. With Fubo also has dropped a lot. I don't have any shares, just a couple of options here, which I'm down a lot on, because I bought them when Fubo was still in the 30s. I should have waited a little more, being patient, but definitely watching Fubo as well. They were down 16% on Thursday, but even for the past week, down about 30%, because this run-up was absolutely crazy. It made no sense whatsoever. I should have bought puts right up here, but I missed out. But definitely watching Fubo. I think they can recover. I'm expecting around 27 to be a potential support here. So I have this put credit spreads for the 24-25 for January 15th that I posted in the Discord group. So I'm definitely watching that for Fubo. And I'm also watching Snowflake. Snowflake actually dropped quite a bit. I haven't even been following them for a long time. I don't have any shares or options on them yet, but if you look at it in the past month, they shot up as high as 423, which is crazy, and then came back down to 281. This was much needed too. Again, with Snowflake, the IPO at 245. I had a feeling they would shoot up like this, but I want to wait to see if they can correct more. 285 is still pretty attractive to get in at this point, especially with shares, but if they can really come back down to IPO price, I think this is a great opportunity to load up on them. Okay. There's also BigCommerce. BigCommerce has been very tricky. I've had debit spreads on them that I rolled over twice already, because they've been extremely volatile in the last 3 months, last 1 year. If you look, they've been just going up and down. They've been really volatile. But I think BigCommerce also is a potential opportunity, because they're at all-time lows right now. So I'm definitely planning to add to my shares potentially. I do hold the Feb 65.70 call debit spreads on it right now, which was actually a rollover from January, but definitely watching BigCommerce. So these are the main stocks that I have in mind. A lot of them have been pretty high-flying stocks, so just watch out for them. Watch out for a rotation into beaten down stocks as well. So banks like JP Morgan looks attractive. Disney has been at all-time highs, but I really think they have a lot more room to grow. Recently, a lot of the run-up has been because of the Disney Plus subscriber numbers that came out. And we saw this insane run-up here as soon as they said that they had 87 million subscribers, when they were projecting 60 to 90 million by 2024. So they shot up because of Disney Plus, which is only a new catalyst. But thing is, as we get more and more to normalcy, I think with the parks reopening, their main source of revenue previously is going to start picking back up. That plus the accelerated growth in Disney Plus, I think Disney has a long way to go from here. Okay, so definitely watching Disney, even though it's at all-time highs, I think they still have a long way to go. So definitely watch Disney as well. Okay, so that's all I wanted to share with you guys here today. Mainly want to talk about calendar spreads and some of the stocks that I'm watching here. Watch a lot of the SPACs as well, GHIV, IPOC. A lot of them are doing really well too, and they're great opportunities to get in as well, in my opinion. But if you enjoyed this, please be sure to smash that like button, leave a comment below if you have any questions, and be sure to subscribe if you haven't already, okay? Thanks again for watching, and until next time, bye-bye.